Dalal Street snapped its 4-week winning streak. The Nifty and the Sensex ended nearly 1% lower, with financials being a major drag. However, mid-caps continue to outperform. Hello and welcome to yet another Editors Roundtable. This is our weekend roundup of all the things that happened in the week gone by. I'm Sonia, and joining me all the editors today. And we also have Rahul Arora here in the studio. Rahul, thank you for being with us.
Thank you for having me.
You know, it has been, guys, a week where nothing much happened, although a lot of things happened, right? There was a Fed rate hike that came through, a lot of earnings, and the markets were a bit disappointed as well. But give and take everything, after 4 weeks of the market gaining, a little bit of consolidation is what we saw.
Yeah, I think you hit the nail on the head, Sonia. It was that kind of a week where every day you felt things are not looking good, but then somehow towards the end, like you saw today, for example, the market just pulled back. One of the other stock just puts its hands up and bails out the Nifty. It's been defending this 20-day moving average. I think 19,550 there, about 19,600 on a closing basis. And all through this, the mid caps have held strong. The market breadth has been quite strong. For me, that's a good sign. As long as that's holding, I think I'll still give the index a bit of a benefit of doubt after this run.
What about like the market on the whole? I mean, it's been a great last couple of weeks, but now a little bit of lethargy is kicking in. How are you feeling about that?
It's going to be very tough from here, Sonia. And I think because if you look at, there are basically 4 pillars on which the market stands. One is Reliance Industries, the other is the BFSI sector, which is 42%, IT, which is about 12-13%, and FMCG. So that's about 75% of your Nifty right there. I think you're visibly seeing NIM contractions in all the banks. It's going to get increasingly difficult for the next 2 quarters. IT has been a bit of a shocker this time around. Tech, Mahindra, Infosys, even some of the commentary from the ones that haven't been as bad has been very circumspect. And a 3% lever volume growth was disappointing. Reliance, the big trigger, is out of the way with the Jio delisting. So I think, or the relisting or the demerger of it. So if none of these participate, it's going to be very difficult to break above 20. And I think there are visible challenges in the next 6 months. I think the way Pharma has done this week is telling you a story, that it may just be the coming back of defensives. The good part is consumer discretionary. We were just talking about Westlife is still holding up. I was listening to the Indian Hotels conference call last night. They were expecting a bumper October, December, because not only do you have marriage season, you have the busiest period for the G20 presidency for India at that time. You anyway have Diwali and you have the World Cup. So I think discretionary may still hold out, but it's going to become increasingly very challenging to justify valuations from here. I think after Q4, we downgraded 55% of our stocks. Wow. And we're halfway through earnings season, and I think we've downgraded about 60-65% already. So when you're still in a downgrade cycle, it's been a liquidity rally. And as you guys, and Anuj was also pointing out yourself, when you have global central banks like the ECB, the Fed, Japan, out of nowhere, turning more hawkish, it's going to tie the RBI's hands. So to make a very convincing case for the Nifty to go to 20, take a 10% move from here looks very, very difficult.
By the way, the Bank of Japan bomb did not go off, right?
Sorry?
I was expecting that today it'll be, BOJ, the last central bank, which is ultra sort of loose in terms of monetary policy, and they will start to tighten, but very incremental, very, very incremental move towards kind of exiting that framework. But you were talking about Pharma, Rahul. Anuj, story baki hai, Pharma. That's what you're saying.
Yes, actually, you know what, I've done some numbers, and I'll tell you what, I'm not really looking at the fundamental triggers why Pharma is rallying. I think Ekta's done that, and I don't want to sort of revisit something which she has already beautifully explained. So let me take a view at something which I called an alternate take on Pharma. This is the rise of a sector which, of course, at one point was one of the biggest sectors in India. Now, look at what Indian Pharma is right now. We may talk about 1 week rally. You can buy the entire Indian generic pharma sector, each and every company available, at a total market cap of 12 lakh crores. Just to put things in perspective, Reliance alone is 25% bigger than that. This 12.17 lakh crores is less than 75% of Reliance. This 12.17 lakh crores is also TCS market cap. So you buy one company, TCS, in that market cap, you have the entire Indian pharma sector which is available to you. That's the number. Now, just to go back, there was a time in 2015 when pharma's weight in Nifty was 7.3%. Look at where it's fallen to now, just about 4.3%. This is a case of serious under-ownership that you have in the pharma space, and for good reason. Look at what these stocks have done. Now, this is Sun Pharma. The price in 2015 was 1140. Look at what market has done from 2015. The index itself has doubled. Sun Pharma still at 1140. Dr. Reddy's from 4,200 to 5,600. Cipla, you can say, has moved in line with market. Maybe it's slightly better than the other peers from 750 to 1170. Look at Lupin, which at one point used to be one of the biggest stocks, from 2,100, and this is after the recent rally where Lupin has moved from 700 to 1,000. Still, it's half of what it was in 2015. The only exception is Divi's, but that's a different kind of a stock altogether. We know that. From 1,000, it's moved to 3,700. That's been the only pharma stock which has done well all through these years. Now, look at this plate, and I think this is phenomenal. This is the FII ownership in Indian pharma stocks then and now. 2015, it was 37%. In Lupin, look at what it is now, 13%. In Sun Pharma, a quarter of the stock was owned by FIIs. It's down to 16%. Dr. Reddy's, which has done well of late, 38% was the FII holding in 2015, and now it's down to just about 26%. And why the space is now doing well, and I think there's some interesting things. If you look at what these companies will do, and I'll give some credit to Rahul here for helping me on this. All the listed pharma companies will generate free cash flow for first time after many years in FY24 and FY25. Cipla, Dr. Reddy's and Sun Pharma, they'll generate 3,500 to 10,000 crores of free cash flow over the next couple of years. And one final point, just look at how these companies are stacked up versus their average valuations. Lupin is trading at 26 times. The 5-year average is 43 times. Of course, the 5-year average has been distorted because Lupin's earnings have been quite bad over the last 5 years. Cipla as well is at a discount to its peers, to its 5-year average. Dr. Reddy's at 17 times versus 25 times. And Sun Pharma, well, pretty much same at 24 times. So there is valuation comfort. And at a time when the market is struggling for value, this is one space where you have at least some valuation comfort. But Rahul, coming to you, and I think you have been talking about this space as well. And I was reading a couple of notes that you wrote. What do you make of this space, and what would be your preferred picks here?
So Anuj, I think the most important slide that you showed there on the wall was under ownership, right? And I think when sectors churn and liquidity is supportive, then stock prices become an academic discussion, because we don't determine multiples. It's the fund houses who basically buy those stocks that determine the multiples, because they'll keep buying in excess of it. I think what you were showing, Anuj, in terms of the relative valuations falling, let's not forget the US market collapsed for the pharma sector. Pricing erosion was to the extent of 20 to 30%. And even now, as you look forward to the next 5 years, you have about $140 billion of branded generics that are going off patent. A lot of these are very high competitive intensity. I think what's going to do well for pharma is going to be domestic plays. And we were just discussing while you were doing your link. I think the last 2 years have been so bad that you're going to see a very FMCG-like phenomena play out in pharma, where you're going to see margin expansion and profit growth. And because most of these guys have done their capex, the free cash flows are going to be very, very strong for these entities. Now you can ascribe any multiple you want. You want to look at OCF to EBITDA, FCF to EBITDA, price to earnings, EV to EBITDA, any which ways. Because the under ownership is so much, that's why you're finding stocks that can potentially become big, like JV Chemicals or Ajanta. They're constantly going up 5-7% because there is an under ownership. And this same thing will happen in IT. I can assure you, maybe a year down the line when we're talking, IT is going to go up in the same way. Today that visibility is not there. So pharma is coming out of that pain. So most pharma companies will see about a 300 to 600 basis point margin expansion between the last reported financial year and FY25, which means earnings can compound at 20 to 25%. Wow. Not too many pockets of the market will give you that. And pharma is now going to go to a situation where most companies will be between 20 to 25% return on equity and capital employed after many, many years. So if I'm a fund today, and I'll give you an example of a stock called Dixon Technologies. It went up from 2,000 all the way to 25,000 because some funds just kept buying it. So, these stocks, they look like they've done well, but I think the top line will probably be between 8 to 12, 13%, but it's a margin expansion and a PAT story. And the free cash flow generation. You'll be surprised with the kind of returns.
Domestic
I would be more...
No,
I'll be tilted more towards domestic. Prashant, the only hybrid play I'll play is Sun Pharmaceuticals, because I think they've got it right. Whether it's Sequoia, Illumia, Winlevi, a lot of these, some are acquired, some are proprietary. I think they've done a remarkable job, and I think they're one of the few companies. The other thing, obviously, Prashant, is that, and I'm sure when you guys interview pharma managements, Revlimid is so much spoken about that let's start looking at things X of Revlimid, because that is going to wear out at some point in time. Right? Yeah. This is not something that is a recurring for lifetime. It happened with so many other drugs. Copaxone was the last big one. So I think a good hybrid is probably Sun, otherwise
The
domestic.
only person who can name all these as good as you is Ekta, perhaps. All these guys.
Okay, well, the other, of course, Pharma was the flavor of the week, but the stock that was, disliked this week was M&M after what happened, and I want to discuss that because, they decided to buy the 3.5% stake in RBL Bank. After that, they said that, we might raise the stake further to about 9.99%. It was viewed very negatively by the street. So just for the benefit of our viewers, revisiting that story, remember, a stake buy in RBL Bank is a non-core investment for M&M, and M&M has had corporate governance issues in the past as well, where they've invested in a lot of loss-making subsidiaries, in a lot of non-core investments. They tried to correct that by coming out with a proper, clear strategy on their corporate, governance policy as well as their capital allocation policy. They said that, they have an 18% ROE target for most of their businesses. They divided it into A, B, C categories. So everything was clear. And now all of a sudden they come out saying that, we're buying 3.5% in RBL Bank. So that didn't go down well with the street. But of course, there may be a larger play involved, perhaps with MMFSL. You never know. So hold, sell, buy. What do you do
I love
with
the
M&M?
tractor story.
Yeah.
I mean, if this hadn't happened, I think M&M would be a buy for me even today. I don't think the valuations are demanding at all. I think things are going right.
You say SUV or something, the tractors.
Sorry? No, I think, you have sub-segments, right? If you want to play through PVs, you'll play through Maruti. If you want to just play a domestic CV story, you'll play through Leyland. You want to play tractors, you'll play through M&M. So, now the debate is all up.
You don't think Rahul drives an M&M
Rahul
SUV,
doesn't
right?
go below Mercedes.
I was just saying that. I was just going to say that, yeah. Okay, anyway, let's move on. The government actually announced its plan to offload stake in RVNL, and that stock has rallied 300% in the last 1 year. The other PSU stocks have also seen a rally, so that's been our focus area this week. How much can the government raise by selling stake in other PSUs? Nimesh has churned out some data. Nimesh, tell us.
Well, Sonia, what I liked about this government's timing is that in RBNL, the stock is up 300%, and now they've gone ahead and diluted 5% stake. So timing-wise, they've done it well. But let me just go to the wall and explain what exactly is the big number that I'm talking about within the PSU basket. So, as I said, in RBNL, the government has sold 5% stake. But if you look at the government's holding in the PSU stocks, there are 23 companies within the PSU basket where the government holding is more than 75%. If they choose to dilute to 75%, they can raise close to 1.5 lakh crores. That's a big amount that I'm talking about. But the big question is if they dilute to 75%. As I said, in RVNL, they've done the OFS. So today was the last day for the retail investors to participate. So now look at the holdings where the government holding is more than 90%. It's largely dominated by banks, the PSU banks, so to speak, the Punjab and Sindh Bank, IOB and UCO Bank. Of course, I understand it's very difficult to dilute stake in the PSU banks. But the one big name is in that list is LIC. The government holding is still 96% in LIC. And if they choose to dilute, in LIC itself, the government can raise close to 85,000 crores by bringing it to 75%. So that's one big number. Now look at the other list of stocks where the government holding is more than 85%. And here there is a lot of momentum in these stocks as well. Look at FACT. Quietly, that stock is up 300% in the last 1 year. In fact, at these valuations, the government can raise close to 4,500 crores only in FACT India. Now look at the other names. IRFC. The government holding is quite high. General Insurance, New India Assurance. In these companies itself, they can raise close to 8,000 crores. But the big stock to watch, which is what I'm focusing on, is Mazgaon Dock. That stock in the last 1 year is up 600%. It's been a huge multi-bagger in that basket. If the government choose to dilute, they own close to 85% right now. They can easily raise 3,700 crores at current price by selling the 10% stake. And interestingly, in Mazgaon Dock, the IPO came at a valuation of 3,000 crores, and today the valuation is close to market cap is close to 38,000 crores. So that's the kind of market cap journey this stock has seen. The other list of stocks is where the holding is between 75 to 85. Even that is dominated by the PSU banks. If you leave apart the PSU banks, even their NLC India, that's one stock where they can raise 700 crores. And RVNL, which spoke about, that stock is up close to 300%. And even in RVNL, with this OFS, the government has managed to raise 900 crores. The bottom line is, if the government choose to dilute to 75% in these 23 PSUs, they can raise close to 1.5 lakh crores. So that's the unbooked profit that the government is sitting on right now in the PSU stocks.
Okay, Rahul, Mazgaon Dock, what's happening here? I mean, all of a sudden.
I wish I knew. Anuj. Unfortunately, one of those that we don't track, but it's been a remarkable stock. I think.
Have you missed the
There is no single institutional investor in Mazgaon Dock. I guess this is the best time government can just come out The registrar will improve, right? There will be mutual funds, FIs who can participate.
I think sometimes you get that left out feeling also. It's just, there was this period, I think every day when we opened the money control app and you saw it, it was like 10% up every day. And I was like, bhai, this was missed. Like literally, since we're talking about Mazgaon talk, I was like, the ship has sailed.
Okay.
But I guess largely the PSUs have done well, right? In the last 1 year, whether it's PSU banks, whether it's these defense companies, whether it's the railway companies, all have done well, right?
Again,
What's
under ownership and valuation, Nimesh. I think under ownership and defense.
Defense, exactly.
Let's not miss out
The
defense.
point is they have to do this, right? It's not discretionary. They
No,
have to come down to 75% at some point. I mean, there's extension, etc.
No, but there are exceptions as well, right? In LIC, the government has there is an exception to the government that if they don't
But
want
that
to
one has not done well also. That's down.
Exactly. So that is one stock within the PSU which has absolutely done not well. In fact, it's below 33% below the IPO price. But still, then they can raise 85,000 crores.
Actually, on a lighter note, there was not a PSU. They will raise a lot of money if they reduce their stake in ITC also. The government of India has a very large holding in ITC as well, and there's a process of demerger underway. But there's a lot, I mean, the way ITC stock is done, if they decided to offload part of it, there's a lot of money waiting on the sidelines there.
Okay, we need to take a short break, but we have many more things to discuss. As Rahul was saying, ITC was also one of the big movers, and we had big earnings upgrades and downgrades that came through this week. So stay tuned for more on that.